morning, this is Melissa with thestockswoosh.com, and today is Saturday, February 2nd, and I'm going to go over a gap play from this week. It was a golden gap for sure. It was January 31st. Here it is. And actually, this is a continuation gap on the next day. Beautiful, beautiful continuation gap on Friday. And you know what? It's lower. It's lower. In fact, let's look right now at the target. Knew this was a good gap on the 31st. I knew it the night before, actually, when the earnings came out. 1658, but that's not that far away. That's the first target. Here, this is the real target, to be honest with you, on this guy. $14, $13.50, $14.40, $14. This is a real target on. This is a damaging gap for this stock. And the day that it gapped, okay, on the 31st, in here, the day I played it, it did not work as smoothly, cleanly, solid red all the way down, all day long, drop as I wanted it to. Why? Who knows? Sometimes they just don't. But for sure, if they don't work correctly by dropping red and closing red the whole first day, they usually do the next day or the next day. And of course, this did the second day, and look, it held 18. Look at that. That was beautiful. And in the morning, I said it had to hold 18. And it did. And then the next day, look, opened at 1756, booped up to 1796 and came in. And this just ran out of day here. Low is 17. It's just ran out of day on Friday. In fact, let's look at Friday's play. Now, I did something else on Friday. But if I had watched this, I could have shorted this right up in here as soon as this did this double top. Look at this beautiful thing, and stayed under 18. It's not just the double top. It's the numbers. It's the price. So it did exactly what it should have done with the price on this day, and then came in. And you could have shorted it right into there, actually, and put the stop over 18. Would have been a 4-cent stop, and you would have gotten the drop. And you could have taken it all out at 12:30. When it got down within 5 cents of $17, I probably would have been out of this into the lunchtime, because I don't like to trade the afternoon, especially on a Friday. But it did continue to bleed down then to 17, and you could have actually added a little bit in here into the 1:45, 2 o'clock time frame. Really nice trade on the day of the gap. Really nice trade then the second day. The day of the gap, the first bar of the day was a little squiggly. Okay, sometimes this will happen. You know, part of that looks like a machine to me, to be honest with you. Computers, black boxes, whatever. But there's people trading this too, and that's fine. And you just have to notice this and be careful. But you notice it didn't do anything wrong with the numbers. Computers are still programmed to set with certain numbers and parameters. That's why you have to trade in combination using the Japanese candlesticks plus price patterns and price numbers. Because if you use them together jointly, you're going to be able to trade much, much better than just doing every sell setup or whatever. In fact, we had a discussion, this is a trading run the other day. You can't just do that. It doesn't work. In fact, look, if you took this 15-minute sell setup here on this great gap, this fabulous gap, this beautiful gap that worked the day of the gap, it didn't work. Why? Who knows? Okay, it was just done. It had a big move, hard drop here in the morning at 10 o'clock and bounced it off of an area that I had written down, but I didn't think it was anything of any significance, that 1620 number. As it turns out, it just held itself on that day. Where was that number? No, I didn't have it in here. Hold on. Oh, you know what? It was... Let me find it. Must have been somewhere over here. I did have 1620 and 1625 written down. There, 1625 was the close of that bar. See that? And I had 1620 written down too. I had both the numbers written down there. It's in this price congestion over here. But I think they were significant because I was looking for at least 16. But again, this is why you don't hold stuff all day to a target. If you got in this play, held the target, boom, what happened to you? You gave back all your money because of the bounce. Sometimes these things, the day of the gap, okay, open, first of all, they gap hard, open, drop hard, fall, and bounce, and then continue the next day as the selling starts to come in. Because remember, not everybody will get out this day. A lot of people will. And then some people will get up in the next morning and say, oh my goodness, look at what happened on this thing the day before. I better get out of it today. I'm lucky I can still get out of it. And then they get out of it the next day quick. And then it continues down some more people the next day. Some people are slow. okay, to get out of stuff. They just kind of want to wait, or they could be in denial. They could be in total and complete 100% denial. And what are you going to do? Let me just go back here to the open of this stock on the day on the 31st and show you what I was talking about in reference to a computer, which is just sometimes the case. And as soon as you see it and recognize it for what it is. So you don't get caught in wigglies and jigglies like that, because it's not good for you. It's not good for anyone. Okay. This is fine. This is fine. This is fine. This. You see that? First of all, that kind of hard movement drop is not people. And then it goes up and does a topping tail in the opposite direction. It comes right back hard again, not people. This is a 1 minute bar. This is 60 seconds. So people don't do that and people don't do this. But the hard reversal back down came right back in. So if you took this trade and got right out, you could have killed it, okay, and then gotten right back in. Why? Because it did hold 18. It really, really did do everything perfect with the numbers. It's incredible. Now, it didn't go to the bigger target I wanted to in the day, but this was a number. And when something bounces into an area, you got to be out of it once the tail starts to come back up here. If you're up in this trade and you're up all this money and the tail starts to come up on you, take it. Okay, especially if you're up $1 more. I have a rule: if you're up $1 more, take it. But this looked wiggly and jiggly here, and the 15-minute looks terrible. But as it turns out, this fixed itself right away. As soon as it did this, it fixed itself right away. So you could have got right back in. Stop, same stop, had to be over 18. Over 18. In fact, you can't give the stop the high of the day here because you would have got booped out. Look, even if you'd given it 2 or 3 pennies, you would have got booped out. The number was 18. I knew that. This squished down, everything squished down. Worked beautifully, but then look, the rest of the day looked like it was going to set up again, dinged up, started to go in again, looked like it was going to set up again, looked like it was going to set up again, then it starts to flip. You can't keep making excuses for this kind of stuff to wait to go later and later and later without doing it. I've gotten really aware of that now, even in the last week with all the earnings and stuff out. I'll give something a chance to go again in the morning. But then, you know what? It shouldn't do this. No. If this goes and sets up here and doesn't continue down into the morning, making lower lows all the time down, can't make excuses for it anymore. Not going to reshort something up here like this, expecting to come back down in. It did break a little bit under here, but not really much. Look, never broke under here. See that? Never broke under here. State to everybody out like it was going to go lower because it broke under here, but this was actually nothing. Okay, this was absolutely nothing then. So this is why, again, you cannot trade just taking every sell setup. You cannot trade just saying it's going to work because it just made a lower low and a lower low and a lower high and a higher low and a lower high and a higher low and a lower low and a lower high. You can't do that. That isn't enough, okay? And sell setups and buy setups alone aren't enough. You've got to do everything in combination together. First of all, you have to know everything what that is, okay, which is what I teach in my class and my trading room. And second of all, you have to recognize it. You have to know what you're looking for with all the pieces, and you have to recognize it and get out of your conditioning of thinking that technical analysis is just based on doing a sell setup that does a lower high and a lower low. No, not enough information. Do you see here this isn't trade accurate like that? But you know what? This chart traded perfectly the day of the gap, as perfect as it could based on the numbers. And the second day too. And it's lower, for sure lower. This is lower on Monday. And will break, actually. The hardest day it's going to have is a nice big red day, and it's going to be the break of 1650. I don't know why it says 1650 here, because this was actually 1620. That was the low on the 31st. Anyways, this is Melissa with FIO, F-I-O. Beautiful gap on the 31st and a continuation gap on Friday. And it's a continuation gap watch for next week. It's a beautiful swinging core trade that we should have played the day of the gap. Called it in my trading room, liked it actually the night before. And at 8 a.m. it says this is a top watch for the day, and it was. Beautiful gap. And if you have any questions or more interest in my gap class where I teach how to find these gaps and rate them in the morning and pick them in the day, or my trading room, please feel free to contact me at melissa@thestockswoosh.com. Thanks and have a great night.